Understanding business finance might seem intimidating at first, but it's one of the most powerful skills that you can acquire to build a successful business. Whether you're running a startup, managing a small business, or even thinking about investing, grasping the basics of business finance will help you make smarter decisions and drive sustainable growth. In this video, we'll break down complex financial concepts into simple, easy to understand terms. Stick with me as we simplify what many find complicated and unlock the secrets of business finance together. To start, let's dive into financial statements, the backbone of business finance. There are three essential statements that you need to know about: the balance sheet, income statement, and cash flow statement. The balance sheet provides a snapshot of a company's financial position at a specific moment, listing assets, liabilities, and equity. The income statement, often called the profit and loss statement, shows a business's profitability over a period, detailing revenue, expenses, and net income. Lastly, the cash flow statement outlines the movement of cash in and out of the business, highlighting operating, investing, and financing activities. Mastering these statements will give you insight into a company's financial health and guide your strategic decisions. Once you're familiar with financial statements, it's crucial to understand some foundational concepts. First, grasp the difference between revenue and profit. Revenue is the total income from sales, while profit is what's left after expenses are deducted. Another key concept is working capital, the funds available to run day-to-day operations, calculated as current assets minus current liabilities. Next, focus on cash flow management, as even profitable businesses can fail if they run out of cash. Additionally, you should learn about cost control and differentiating between fixed and variable costs to maintain profitability. Mastering these concepts helps you make informed financial decisions and keep your business on a solid footing. Finally, let's talk about financial planning and the role of financial ratios. Effective budgeting and forecasting are essential for predicting future financial performance and preparing for both opportunities and challenges. Creating a budget allows you to allocate resources effectively and measure your progress against financial goals. Understanding financial ratios is also key. For instance, liquidity ratios measure your ability to cover short-term obligations, while profitability ratios show how well your business generates profit relative to revenue or assets. Leverage ratios assess the level of debt compared to equity. These metrics offer deep insights into your financial status and inform strategic choices. With these basics under your belt, you're well on your way to mastering business finance and steering your business towards success. If you found this video helpful, then share and subscribe to get more videos. Thank you for watching.